Hi, good morning. Well, we've had a lot of treacherous running in place last week. We call it a Christmas tree pattern, which communicates that it was directionless but lit up, red, green. And they were wide ranges, which why I use the word treacherous. It's a news-driven market, and look, it's in an uptrend. Over the last couple of weeks or so, we talked about prices getting extended, which is an indication of strength. Markets don't get extended to the upside unless there was strength or extreme weakness to the downside to get extended. And while we talk about extended from moving averages, that's only to represent it as a visual aid so that you have a measurement across all instruments to just see how far they are from the 20 and the 20 from the 50 and so on. That doesn't mean prices have to pull back. Rather, they can go sideways as they have, but they've gone sideways in an erratic way. So historically, things calm down before they take a direction. Now, a lot of times we see that the 20 MA catches up with prices, but it doesn't have to. It's just a moving average that we use. And when you see it happen, it looks like, wow, what a great technical tool. And then when it doesn't happen and you see, oh, it touched the 10 MA or it touched the 21 exponential, those are the type of things that, based on technical analysis, just confuses or clouds everything up. And you have to realize that there's no perfect tool. It's the price action that we trade. So this moving sideways, I don't think it's going to take off for two reasons. Well, it's wide and whippy, and that typically doesn't happen from a wide whippy kind of range. Things typically calm down, or you get some type of breakdown failure, which kind of flushes out those trading within here are holding on and kind of relieves the potential supply that would come in on a move up. Because this is, look, if you've been trading over the last, well, let's just call it last week, as things are going up and down, it's crazy. Nice rally day here, strong, Biden tax jargon collapse, jobs information good. Oh, right back up again. It's a schizophrenic type of price action, but it's just in a trading range. So it's really directionless from a higher time frame. And it's, I guess, directionless in the lower time frame, but at moments in time, it takes direction with a vengeance. Which leads to, erratic kind of crazy type of price action, which can play havoc with positions. So 440 today. So we're looking at SPX. Futures are down. They were, now they're up a little bit. So they're basically directionless here. There's lots of earnings reports coming out. So, there has to be a degree of, tentativeness as to what that can do as to the direction of the market, which is normal, which kind of suggests that we're going to chop around some more. So there's no support at 440, but that's kind of a relative large place to fall, and it would be the bottom of the trading range. And I don't think there's a reason to break through the bottom of the trading range. Again, based on this directionless price action, based on earnings reports that are coming out. Who wants to get aggressively short in front of an earnings report that could come out that could rocket the market? So I think 440 could be okay. Me, I like to the no-brainer. I don't know. I didn't look to see if there's a premium down there, but just because it's at the top of the trading range to fall back down to the bottom of the trading range and then to look for it to bounce back up again makes a whole lot of sense. 40.75 for Wednesday, 40.75. Yes, yes. Well, Wednesday's a long ways off, and you're going to see what earnings reports come out tonight and Tuesday. So, if you want to put that position on now, well, you can do whatever you're going to do. You're McGraw. I wouldn't do it, but that's me. I want to see more information. It's far enough away, and it's a significant support area. Well, relatively significant. Now, if things were to fall, we always look at where our lines of defense, and that is based on where might institutions buy. Well, obviously, the bottom of the trading range, 4,100. That's a big number to get through. There's relatively, compared to what's around it, open interest there. There isn't a lot of support. It's more of a whole number. Now, this is a relatively large reference point of support that's gone sideways. Now, the downside of that, just to give both sides of the story, that's far away. Well, if it was to fall down there today, I think putting on a position today, if it was down there after some price action like this, would make a whole lot of sense. However, if this chops around today and now you've got 5 days of going sideways and this breaks below here, I think you're going to get run over, because I don't think this is going to stop at the 20 MA if it starts breaking below 5 days of congestion. Now, when we look at trading ranges and we look at something like this as intraday traders, we look at the daily pattern. So what I'm explaining right now, as far as breaking through here, is based on the daily chart. Now, what if this came down to this area today and went sideways? And Tuesday, it kind of blipped up and it came back down and went sideways. Now, you've got this chopping around here over a couple of days, and then it starts to break. You're going to get slammed in a situation like that, versus you're looking at a trading range on the daily chart and recognizing that it just fell, it's a 20-story building and it just fell 18 stories. You're getting my point. It's likely it's going to hit the ground real soon. So the area that you're looking to sell as a put spread makes sense. Right? So we look at patterns and we look at multiple time frames and we bring common sense analysis to those multiple time frames. So as far as Wednesday goes, I don't know. If it fell down there today, I would say, yeah, let's take a look at that. And, with a price pattern, because the premium would be huge at that point in time. So 40 can work today. The furthest away you can get from, being under support, there's really nothing there. And as I go and look here on a smaller time frame, you've got this little congestion there, of course, right there, the bottom of the range. So I think that could work today, because look, it's close enough to the bottom of the range. And if for whatever reason this was to fall sharply in the first hour of trading, I think that's a good trade to put on once it stabilizes. All right. All right. S&Ps, right at the top there, you can see resistance, support. Not much to do to see. Can it hang up here? If it breaks below these pivots, it opens up the door to a pullback. The buy the dippers, you don't know where they're going to show up, but we look to the left and say, well, this would be the area, and that will be the case until it doesn't hold anymore. YM, same story, just a lot of running in place, going nowhere. Trading this, you're likely to be the frog in the blender, and just put that image in your mind and you know what I mean. It's just whipping back and forth. 4210 should be fine. I think, 4,200, big whole number. We're looking at this up here. And so the idea of the trading range, earnings reports coming out after the close. I mean, unless somebody knows something, and someone always knows something. Why should it go through that with the uncertainty of what's going on? It's at the top of the range, so you're close. So look, 4210, breaking out above here while this is up at the top of the range. Look at it in this way. It's up at the top of the range. Look at the S&Ps. Right? It's resting up there. That's bullish. It's created a pivot and buyers stepped up again. So what you might want to do is say, look, let's wait to see if this level isn't that far away. It breaks here. Now you've got this area of congestion up above and you sell your call spread up above there now that you've got this line of defense versus trying to do it early on where this could break through here after resting and, now you're sweating. That being said, it's hard to imagine it's going to go much further than that anyway. So, you measure it out. It comes up here and gets a nasty wide range bar down. That would be another reason to consider it. So, yeah, I think 4110 is fine, and 4140 or below, just because of the trading range and what I've already explained. NQs, same story, running in place, lower high, chop back and forth. Not much difference there. Now, the Russell, pivot high, but breakdown failure. So, it came down. There's no pivot here, but little common sense. We choose to use 3 higher low bars to the left and right. It works. Now, just eyeballing this, and there's 2 to the left and a whole bunch to the right. We know that this is a pivot on an intraday time frame, an hourly for sure, 30 minutes for sure, so on and so forth. So the buy the dippers, even on a vehicle, an instrument that has been chopping nowhere, bought aggressively on the breakdown and drove it right back up here. So we're interested to see if this Russell can get through this pivot high. And looking at the ETF, you can see it's a little more clear, but breakdown came right back up again. So a little choppy price action up here would be ideal, maybe a correction bar and then up. But everything I look at, this morning is saying, hey, go look at, stocks that might be on their own page, trade a little smaller, see if you find things that, are doing well, so on and so forth. But the markets appear to be, going to be range bound for now. Bonds, doing nothing here, chop back and forth. That's a 30-year. This is the 10-year. Same story, and this is the kind of thing that's been happening. Rejection, breakdown. It rallies back up again instead of going back down to the prior pivot low. So one of the frustrating things, as far as the way I look at things anyway, is that when I was to see something like this, I see a green bar ignored, I see these rejections, and then it starts to break down. The factory worker process says, well, this is where buyers should be. Well, buyers show up in the middle of nowhere, so to speak, and rip it right back up above the prior pivot high. I've got an email to answer from a trader that's showing me a bunch of charts like this, and he's been around a long time and he's done well, he's successful, and he's like, I'm getting really frustrated here with what's going on. And I have to communicate, look, it's not you, you know, it's just the way things have been here within this trading range. So Russell 215. Yeah, it makes total sense. Yeah, 215, 210, sure. Absolutely. You know, it's at the top of the range here. That's pretty far away. You know, ideally what we look for is something, you know, begins to fall, premiums pop a bit, but yeah, sure, that can work. All right. Internals. Internals here. So neutral, neutral, not giving us any help. The day to day, the good thing is, from the bullish point of view, is that the breadth was good, meaning it was strong breadth on the up days and weak on the down days. So little, you know, this number for sentiment is still historically bearish, but it's been that way in this market. But really, no help from internals here, other than the day-to-day confirmation of the green bars. And we looked at bonds. Oh, gold, you know, backing off a little bit here, but looking good. I mean, at least it broke above two prior pivot highs here. It's above the 50. There's been a lot of improvement. So, you know, this is a mess on the 60-minute, you know, buy pullbacks. Silver, you know, I don't like it when they come back down under the wide range bar. You know, we like them to see them stay up here. So it's at resistance. So that kind of price action, it kind of makes sense. But, you know, there's still some hesitancy. It's rather messy. The weekly chart isn't very appealing either. Uh, Oil kind of been all over the place, and the ETFs, the oil ETFs, broke down, which did great. You know, the S&P ETFs, oil has been the top performer this year, but it's gone through a sizable correction. So a lot of money coming out of there, and the transports, they're hanging up here. You know, they just poked up to a new all-time high on Friday. You know, a little peekaboo. And, you know, I didn't talk about the weekly charts, but what time is it? It's late. But just take a look at this. You got all these little doji hangman kind of bars up there. You know, still earnings coming. It's not like it's up 14 bars in a row. It came out of a base, but you know, slowing momentum bar. You don't want to see prices break below the low there. To you, Dan. Does Dan frequently call you with frustration? Only about young ladies and, you know, buying runners for people that don't return them, that kind of stuff. Not about the markets.
All right, I guess you're done. Good morning. Hope everyone had a great weekend. Got a ton of earnings this week. Fangs. I'm actually glad the Fangs are staggered. Monday, Tuesday, Wednesday, Thursday. So all our opens look fine. We sold a put spread on coin, and I see that. It's having a nice gap up. Bitcoin's up. So if you have any questions on any opens for SAS, but otherwise they all look fine. The number of things gapping over the entries. Our little Neo. Neo, nice little gap up. Our AMC gap up. Square gap up. I put Neo. I'll be tightening the stuff on that. Let's go to. Is Neo still strong? Absolutely it is. It looks great. Yeah, we entered on the just picture perfect day here. Picture perfect. A little symmetrical triangle breakout. trading over 2 bars. So we're just in trail mode right now. Look at this NCTY. These are, we'll go through, there's not as many earnings today, but let's, here's another bottoming pattern. I like the gap up here, bottoming at the 200. So I like that, 10, 15-minute high. Tesla, John, your drop down. Tesla, yeah, we had a put spread on this on Friday. It has earnings this week. It's a bullish pre-market, but you know, it's kind of right here. It's some problems, but it can be a mover into earnings. Let's see, FHN, alarms going off, CC alarms going off. Elf Tango, we entered on Friday. Looks good. PM and WFT. PM, I loved it on this bar. Gap reversal on support, railroad track. It's right here. It's right here at the prior highs. So I don't know, 30 or 60-minute high would be better. KHC. Yeah, that stupid thing stopped us out last week. We bought the breakout as a pre-earnings trade. I'd move the stop to Friday's low if you're still in it. Thomas, WFT. WFT? WFT, I'm not getting a symbol. Piton. Piton is it's on support, but it's weak, and it's a bearish weekly. So that's on my list for a possible call spread. Lazar, Perkin here, pre-market. And see, this was a V bottom, but you have a wide range bar from a V bottom with an inside bar. So that was a very tradable 1, 2, 3 in a downtrend, just to ride the elevator back up. And then you'd just be in trail mode. Now it's, wow, gapping up $2, which is a big percent. Missed the entry on that if you didn't get in on Friday. We're already in it, Emmanuel. We already have we entered on Friday, call spread. Gapping up $1 here, but it's fine. Thomas WFC. It's a bank, you know, it had this wide, beautiful 1, 2, 3 right here. So we actually had that in the last weekend's letter. That was a beautiful setup. Gapping up, coming into support. Yeah, you can buy 15-minute high. Sure. 15-minute high. WFC. We'll obviously want to check the markets, and we'll want to check XLF here is holding well. XLF looks great. It actually would be a put spread candidate if there's any juice. But yeah, I like that. So I like NCTY. Checkpoint had earnings, gapping up here to these prior 2 tails on the daily. So that's a 15-minute high candidate. Big bottoming pattern, 20 and 50. Flatten, turning up, and you got a price void. So I like that. I already looked for a weekly puts to sell. That would be a fantastic setup, but there's no weeklies, unfortunately. This one gapping up in the middle of Thursday's red bar, but possible day trade because of the price void. Jets here. The sector leisure is getting a little perk. There was some news that Europe might start allowing more traveling, loosening the travel restrictions over the summer. But CCL, that's worth watching to get back in. RCL, I know it's right there at these overlapping bars, but it's a nice downside shakeout. NCLH. I actually like this one the best because this one went deeper into these overlapping bars. So this I like also a lot. Keep an eye on that. TJX. It's up 3 bars. I don't trade breakouts like that. I you know 174. What is going on with PFPT? The way it's really narrow, that looks like a buyout to me. Otis had earnings. Ooh, that was a nice gap candidate, but now it's blasted too much. So no interest. ACI earnings getting down. No great pattern. Open and C's. Open. It's another bottoming pattern, but I don't like the overlapping moving averages at resistance right there. I think we can find better. Well, I know we can. We got a ton of longs in the advisory letter, and I'm finding a couple more here this morning. Obviously, David's asking about put spread on C's. Definitely, if there's any, go through your checklist. We're actually long the C's, but the problem is, this wide range bar on Wednesday was your ideal entry because then you can get more for your put spread. Now we're in trail mode. LII 349. That's a bullish daily, weekly, monthly. BOH. SJ 1231. This was a nice earn with flat MAs with a price void, but now the gap's too big for me. I would have preferred if this were just gapping up to say like 1050, 1080, anywhere in here, just above this, then I would say 10-minute high looks great. But for me, the gap's too big right now. Mr. Wallace, we're in. I had an up alarm wall. We're in this, looks great. I'm now going to move the stop under this green bar. Well, actually, the red bar, 104.66. We've already sold 2/3, so we got the final third.